Hi guys, it's Thomas here from COTBase.com. Welcome to this week's COT review. Today we're going to be analyzing the fourth Commitments of Traders report of 2025. And as we always do, we shall start out by looking at the largest changes in commercials net positions. But before I jump to the review, just a brief reminder for anybody who is new to COT analysis. Here at COTBase.com, you'll find a lot of educational material. Not only do we have these in written format, but we have some very useful videos as well. You can also choose to subscribe to our YouTube channel and get notified if we come out with new videos. If you need further assistance, one-on-one time with me, we have a consultations page where you can actually book a consultation with me and learn about the services, the report, anything you want to talk about. Back to the review in just a moment, but before I do, we also have some New Year's deals going on in January. If you'd like to take advantage of these wonderful prices, you can still do that. There's another roughly 1 week for you to take advantage of these great prices. Okay, let's get started with today's review. Sugar is on top of our list when we are looking at the classic COT report, futures and options data combined. There's a 21% change in commercials net positions based on a 52-week look back period. So here we have sugar, and that's the change in commercials net positions from a week ago. You can see that this change size is larger than average. It is a bullish change signal, but we've already seen a rise in the market. I'd say the previous week's report was already a larger than average change size, was able to halt this decline, and now we see a reaction from the market. If we move over to a 5 years chart, you can see that not only do we have a bullish COT change signal, but actually if you look at the chart, commercials are at a 269 report extreme, large speculators 267. So significant stress levels in traders net positions, bullish COT extreme suggesting once again a move upwards. Moving on to our next market, gold, with a 15% change in commercials net positions. Let's look at the 1 year's chart. Here you go. It is larger than average, but honestly, nothing exceptionally, surprisingly large. I would not necessarily put too much emphasis on that signal. If we look at the 5 years chart, you can see that we are of course getting towards bearish COT extreme levels. However, we have seen even on this 5 years chart greater extremes. If you go back over here to 2020, you can see that there was a time when commercials reached 426,000 contracts net short, whereas today they are standing at 344,000 contracts roughly, if I'm not mistaken, or 329. So, there's some space left. So I can imagine the gold market continuing its rise. And as it does, we see an even greater bearish extreme. Moving on to the dollar index, we're going to jump over metals complex. Complex charts, something unique at COTBase.com. What we do basically is we combine the individual markets of that sector and we come to a combined COT data, something unique. The US dollar index is our next market, 10% change over here in commercials net positions. It is a bearish change signal, but it's nothing huge. Honestly, I wouldn't put too much emphasis on this signal either, simply because looking at the chart, it doesn't look that big. And something I would mention with the dollar index, if you haven't yet known, but COTBase.com actually created the true US dollar index, which might be a little bit better way of analyzing the strength of the dollar against the basket of currencies that it's compiled of. But anyways, even the dollar index in itself, so those futures traders who trade the dollar index futures contract and its data, the COT data on that futures market, is showing a neutral zone. So nothing huge. We had more of a bullish COT extreme back over here, bearish extreme levels back over here in 2022. we're in between those extremes. So I think the dollar may easily rise based on the COT report analysis on the US dollar index. The true US dollar index, I'm going to show that to you in a moment. Let's open that chart real quick. So here you go. You can see that over here on the true US dollar index, the extreme is more visible. And if you go back in the past, you can see that actually the true US dollar index, something unique to COTBase.com, is a more accurate way of analyzing the strength of the dollar index, because it actually combines all the individual currencies data into one complex COT data. Anyways, moving on to large speculators COT Extreme analysis, we've got feeder cattle on top of our list with a huge all-time COT Extreme in large speculators net positions. What does an all-time COT Extreme mean? Well, it means basically what its name suggests. In the entire history of COT data on feeder cattle, we have never seen large speculators at these levels. It is an unquestionable bearish COT Extreme. Even commercials, as you can see, it says 1 because just the last report was the all-time extreme. Right now we have a all-time COT Extreme. Humongous stress levels built up in traders' positions in feeder cattle market. This, of course, in itself suggests that we should be expecting this market to decline in the next couple of weeks and month ahead of us, unless this becomes a commercial capitulation, something very, very unique. You will find an example on that, an explanation on the On COT page at COTBase.com. That happens when commercials, and in the case of livestock markets, we know, I explained this to you many times in the past, a lot of traders, a lot of farmers in the feeder cattle business, they don't necessarily reach reporting limits of CFTC, and thus they are categorized into the non-reportables. That is why, contrary to what we would expect based on grains, soybeans, currencies, the correlation is actually more visible between commercials and small speculators, right? Anyways, if commercials start getting margin calls on their hedging activity, then we may run into a situation when feeder cattle just continues its rise and commercials are getting these margin calls and they have to close their short positions, which just further fuels the rally in the price. Okay, that's something we should always keep in mind when it comes to these classic or traditional markets. Moving on, we talked about the sugar market. We're going to jump over that and arrive at corn. 137 report extreme in large speculators net positions. This, of course, is a bearish extreme. However, it may widen to greater levels because, as you can see, the last major extreme was a bullish COT extreme just preceding this bottom, and there's some space left to reach even greater extremes. As you can see on corn, we may see this continuation before we reach a top. Last but not least, we've got the Mexican peso with a 97 report extreme in large speculators net positions. They are roughly at zero right now, net zero territory. Not really an extreme I would be that excited about. But hey, it's a currency, it's measured in US dollars. So if we are saying that the dollar index could decline, as we did the analysis on the true US dollar index, that may actually put some support underneath the Mexican peso, and we may see the Mexican peso rise. That is going to be all for this review. Of course, there's a lot to do here at COTBase.com. If you haven't yet subscribed to our YouTube channel, please consider subscribing. It would mean the world to us. Thank you so much for your attention. I will see you next time.